Welcome to the indices, and here we're looking at the US 10-year notes, and the current move up here on the 1 hour chart is in 3 waves here. So that's a corrective move to the upside. Once it takes this low out here, then that will confirm that this is actually an A and a B and a C, and it will go lower. Now the importance of this is that the lower the notes, then the higher the stock market will go. So that's one point that we can look at, because there is a bearish connotation to the stock market. And let's have a look at the S&P 500. So we were looking at this structure in here yesterday, and just looking at this particular one here, it appears that we've got 1, 2, 3, 4 and 5 down through to here as a 5-wave structure. Now on the cash market, the wave 4 here overlaps wave 1 here, which we can have a look at, which is which sort of breaks the Elliott rule, really. So it makes it an ABC. This is down for 1, back for 2, down for 3, back for 4 here. It overlaps into price territory of wave 1 here, so it cancels it out from being a wave 4. So it makes it more like an A, B, C for the A wave, up for the B and down for the C wave here. But we just need to be a little bit sort of careful about that, because when I have a look at the Dow transports, which have been giving a clearer wave structure on the daily chart, from its high up here, you can see that it's a very clear 5-wave structure to the downside in terms of down for 1, back for 2, the 3rd wave here with 5 waves in it, the 4th wave pulling back as it should, and then down for the 5th wave here. So from the high, we have a very clear 5-wave structure to the downside here. So in this case, we would look for an A and a B and a C back up, and then moving down further. So it's something that we really need to be aware of when working with the S&P 500 and the Dow Jones as well. The Dow Jones is exactly the same pattern on the cash as it is to the S&P 500 here. In terms of trading, if we had a nice support on top of 1872, well, then we would go with that. So if I just drill in here a little bit, this is just the 5-minute chart, and this is the move that's moving up through here, and here we're at 72 here. So it does appear that this is the strongest bit of the structure here. So it does appear that this would be the 3rd wave building through here. So look, any support on top of this would be advantageous to the upside, but would have to expect something like this as well occurring, something of this nature here. So you really wanted to see it build up here and stay on that, and the stop would be at 63 here, of course. Yeah, so look, there's a bit of a two-way thing there. It's looking bullish on one chart, but bearish on the other, and the Dow Jones itself same as well. So look, until the 16,500 becomes the support for this market, then we still need to consider that this is a rally to this point here, and we've got 5 waves down through to here, even though we can't count them very clearly on the Dow or the S&P, but the Dow transports are running well, so we need to keep an eye, include that in our analysis. So this can move down through to here, move back up here, fail, and then roll over here. So any long trades would require support, nice solid support on that 16,500. And it goes for the DAX as well at 9,500 as well, looking through here as well. The move down through here does count as corrective, and it's pulled back to the right place that we wanted it to, but now we need to see it sitting on support here. So if it can develop support on 9,500, then it'll be on top of the orders, and then we can look to scale in through 95, 10, 20 and 30 to the upside. If not, well, you can't go long, as simple as that. The FTSE at 6,700 here. Last time we were looking at this in as wave 4 here. We didn't get a chance to look at it yesterday, I don't think, but it's moved along a little bit. It's still wave 4, and I could even put this wave 4 here in terms of an A wave, a B wave, and a C wave back down to here. But look, the main thing here is developing support. It is very overbought on the daily at these prices here, but looking for support on top of 6,700. We've basically been mentioning to be long above the 66.72 area, and the next time to build into the trade on the long side is 67.20 as support. So basically these highs here, but I'm just using the 72 number as I would. So yeah, let's just see how that sort of climbs up. But this is in more of a bullish pattern than the other markets, but it is at the same time, it is highly overbought at these highs here. So we've got to be careful we don't get this sort of rounding off through here and then peeling to the downside. That's why the market needs to prove to you that it's got strength, and support on 6,700 is step 1, and then 10, 20, and 30 obviously are the next steps there. The ASX 200. Just looking at it on the daily chart here and being sort of a bit more chirpy about the whole situation, is that on the daily here, looking for this to be wave 1 here, and ABC back for wave 2. We've been through this before, but up for wave 1 here and back for wave 2 here. So we're in wave 3 of wave 3 here. So we should see it move off quite strongly. We are seeing the banks leading and doing all the right things, and their wave counts are in third waves as well. So everything's going reasonably well. We've got, some of the banks are stronger than the others, of course. This little move up here that we've been working with here, we've tried to be long above the 54.30 here. But this, what I'm looking at now is this little move up here, being in 5 waves, and after 5 waves we'll get a counter trend and then another 5 up. So that's kind of what we're looking at. We're looking at this 5-wave structure up through to here, and not a very good picture of it, but this is it coming up through here. Been a bit of a tricky one to count, and I don't even know if we should start the count from where I've done here, or actually have this green wave 1 to here. I'm not quite sure about that, and none of this really works out perfectly either, but I think I've sort of got the best possible count that we've got for this here. So I could put green wave 5 on top of this little guy here, okay, because we've got 1, 2, 3, 4, and 5 to here. So we've got a 5-wave structure to here. So this little move here, if it takes out this high here, then we know that we're actually building the third wave up still to the upside. So we want to see that 55.67 high here. I think that's it roughly there, not quite, 55.65. So we want to see that high taken out there, because then that will prove to us that we're actually going to be getting more up through to here. And that's possibly the case too, because this little guy in here is, you can see that it's in its sort of 5-wave structure here. The third wave, the strongest one in the middle here. So this is probably the 4th wave here and a 5th wave up here. So it's likely to come up into group 2 here and then struggle from that point there. But if we drill into that a little bit, just on the 5-minute chart, we can see, just like the US markets, it's got this 1, 2 here, and well, we could probably count wave 1 to here really, in terms of 1, 2, 3, 4, and 5 to here, and the third wave here, probably the 4th wave here, and the 5th wave up here, taking us up to probably the same length as wave 1 here. So we take the length of wave 1, pop it on the bottom here, and it'll take us up into the 5570 area here, but that's into group 2 area here. But that 5 waves here, and taking out this old high here that we just mentioned, gives a positive spin to the to the structure that we're looking at going to the upside. So that's a positive thing. And also, I won't go into it now, but as I've mentioned before, we've got Woodside and the banks looking positive to the upside, and we've also got the banks have been driving it, but we've got some of the material sector coming in now as well. Not the energy sector, but as such, I mean, Woodside's been, you know, ready to be moving sideways for so long. That's why we've been trying to catch it to the upside and finally got it. But the actual oil market, you know, that's been negative, but we'll see a strong bounce off the 100 in the next session. But natural gas is to the upside, but it's more the materials, because we're seeing the copper market push up, and iron ore and copper and the rest of the metals are be in line with that. So we can still see further upside for those guys. So that's all good. And if gold climbs above the 1300 there and does what it's supposed to do, then we'll see that move further up. So basically what I'm saying is we'll have the finance sector and the material sector on side, and when you got those two on side, then we normally see quite a good run in the index, and that's it's always good to move into the game on that note. But look, we're basically moving our stops up. I think it's under here now, 5523, because if that fails, then we'll be folding back into the 500 there. Alrighty, all good. Cheers.